It's class warfare for the digital age. And in the battle over GameStop, investors on message board Reddit seem to have gotten the upper hand. Hedge fund Melvin Capital lost 53% on its investments last month. That's after betting GameStop shares would fall. Instead, the struggling video game retailer rallied more than 1,600%.
Hey, I think it's great that rich people are losing money because capitalism is destroying this world. And that's all I have to say about that.
You can be your own bank, you can do your own transactions, verifiable, permissionless, decentralized. It's the future of commerce.
People on Reddit, or Redditors as they're called, also poured money into shares of cinema chain AMC and American Airlines, making hedge funds bleed. Now, that army, taking its cues from the subreddit Wall Street Bets, has a new target: silver. The price of the precious metal rose 11% to an 8-year high on Monday, adding to a 6% gain last week. Shares in Australian mining firms Argent Minerals and Investigator Resources also rallied, and platinum gained nearly 4%, while palladium was up 2%. The silver surge came as some on Reddit said it would be a way to hurt banks for allegedly keeping prices down. But with silver, small investors may find an asset that's harder to bend to their will. The silver market is worth as much as $1.6 trillion, while GameStop's market capitalization stands at just around $22 billion.
There's more participants trading silver than there is GameStop. So that's the big difference today. A big move, but not as big as in retrospect as to what the GameStop was.
Still, analysts say small investors have discovered exactly how formidable they can be by banding together. And to bet that they'll give that power up will be a quick way to lose a lot of money. Paolo Montecillo, TRT World.
Well, for more on this, let's go to Ted Seifried in Chicago. He's Vice President and Chief Market Strategist at Zaner Ag Hedge. Welcome back to the program, Ted. Now, with GameStop shares, investors on Reddit wanted to punish hedge funds who are really looking to drive the stock price down. But what's interesting with silver, I mean, obviously there are a lot of explanations out there, but one of them seems to be they want to punish the big banks who they say are artificially driving the price of silver down. Is there any truth to that, and how would the banks be doing that?
Well, I'm not sure that there's any truth to the banks pushing the price of silver down, but there is a truth to the fact that big banks want exposure to things like silver and gold in order to insulate themselves from their currency exposures that they have. So they're half right, I would say. They definitely have an effect on banks when they come into markets like these and try to push what they did in GameStop, which is a short squeeze. Now, the interesting thing about that, Oscar, is that short squeezes are not something that it's not a new thing for us in the commodities world. These are things that happen all of the time. If you go back and look at natural gas about 9 months ago, we saw someone who was very short calls, and we saw a very similar thing happen there to what had happened to GameStop just here recently. The thing is, this is a much, much deeper market, and the participants know how to handle themselves better in times like these because they are prepared for these sorts of things. So if Reddit thinks they're going to come in and push around silver on any major scale, they might end up being sorely disappointed. Now, in the meantime, I think there's some really good things that are coming out of this. You know, you had some of your major silver broker dealers shut down some of their sales over the weekend because they hit 9 times, 12 times their targets of what they're used to selling over the course of a weekend when the markets aren't open and they're not able to hedge. So they wanted to reduce their exposure to things like that. You are seeing a tremendous amount of interest in physical silver, which, by the way, I think is probably a really good thing for investors to diversify in, especially these Reddit investors that are just really trading paper. But when you're dealing with the futures market, you are dealing with leverage. You're dealing with being margin. You are not just buying a share and pushing the price higher. This can be a very dangerous game, and it'll be very interesting to see how this plays out.
Now, GameStop shares and silver are obviously two very different assets. Let's look at the US retailer, for example. I mean, the rally that we've seen in that stock seems far removed from the fundamentals of the company. It was valued about $1 billion a matter of weeks ago, and now it's about $20 billion, which seems quite irrational in anyone's books. But if you look at silver, it reached a low of about $12 an ounce last March, and obviously now, as we've been reporting, it passed the $30 an ounce mark. How much is silver really worth?
Yeah, that's a great question. And going back to the GameStop thing, this was a situation where investors smelled blood in the water. When you look at the amount of calls that were short, there just simply aren't enough. There's about 150% of the outstanding shares. So when you know that, you can push that, and then there aren't the shares to buy. You could potentially have the same situation in silver. So they're seeing the parallels there. But what is the fair value of silver? I mean, if you look at the gold to silver ratio, we're not too far off of it. Something in the mid to upper 20s, I think, is ideal. I think that really makes a lot of sense. I do think that silver has potential to go higher because of the speculative interest that we have in buying and owning physical silver. I don't think we're going to see these major numbers like silver going to $160 or the percentage gains that we saw in GameStop, the 16,000% gains. I just don't see that being a possibility in silver because it is a tangible commodity that has intrinsic value. And we can't really, I don't think we'll push that intrinsic value that much further than what it really is. Now, something I would like to note, there are some interesting things in other commodities markets that haven't caught the attention of the Reddit crowd. And in particular, I'm looking at grains, in particular soybeans. This is a market that we're going to run out of soybeans here in the US between now and the next harvest. If they really wanted to pick on something that wasn't able to be physically delivered and could have a really massive potential for a short squeeze, this would be a very interesting market for me to be looking at.
Fascinating. We know nothing's really out of the Reddit sphere's realm, is it? So soybeans may be next. You never know. Watch this space. Ted Seifried, thank you so much again for joining us from Chicago.